Welcome to Season 3 of the Knack 4 Business Podcast. Over 350 episodes strong, we're here to ignite your entrepreneurial spirit with fresh insights, networking gems, and creative strategies that elevate your game.
So I have a question for the audience. Are you missing out on tax strategies that could save you thousands and help your business grow faster? Eric is going to break down the advanced tax planning secrets used by high net worth individuals and how everyday business owners can start using them too. He'll share his journey and his insights from his book, The Great Tax Escape, the practical financial habits that drive real results. If you're ready to stop leaving money on the table and start planning smarter, tune in now and learn how to escape the great financial traps holding your business back. Direct from one of the most trusted CPAs in the U.S. Eric Pierre is our guest, and he's from Pierre Accounting. So, he's the founder, CEO, and principal of Pierre Accounting, with offices in Austin, Los Angeles, and San Diego. Since 2003, Eric has been a trusted force in accounting, tax strategy, finance, forensic auditing. With a strong background from Fortune 500 companies like Deloitte, Abbott Labs, McDermott, he's led global financial projects across Asia, Africa, Europe, and the Americas. Eric's specialties include advanced tax strategies, real estate, merger and acquisitions, and financial planning for businesses ready to scale. A second-generation CPA and proud graduate of Stephen F. Austin State University, Eric holds licenses both in Texas and California. Beyond the numbers, he's been featured in Forbes, CNBC, Bloomberg Tax, and once played pro basketball with the San Diego Guardians. Eric now devotes time to mentoring youth through jail to jobs in Celio sports, including the legacy of service and excellence started by his Haitian parents. Eric, it is a pleasure to have you here today, sir. Welcome. And do you have a favorite quote or saying, sir?
I believe it's Albert Einstein that said, adversity reveals a real man, something along those lines. My thing is that when you go through adversity or even success, you get to see who the person really is.
So what made CPA, you play basketball.
Yeah.
You're totally different. It's an action. It's a fluid motion activity on the court. And now you're a CPA. How did you drift into that lane? How did you get there? What made that happen?
It's a funny story. I'm a basketball guy. So my dad, I'm playing basketball in my backyard one day, and he comes home from his job in accounting, and he sees me playing basketball. He said, "Hey, son, I got a question for you." I said, "What? What are you going to do?" He says, I've not gotten any letters from Dean Smith, who was the head coach at North Carolina, right? Jim Herrick, the coach at UCLA. Roy Williams, the head coach at Kansas. David Stern, so you're not going to be a high school to pro like Kevin Garnett. I don't think the NBA is in your future, so you may want to have a plan just in case. And speaking of my dad, he actually thought I was better in baseball. I probably could have been pro in baseball had I stuck with it, but I hated the high strike zone. Then I see Aaron Judge, who's my high mash and homers, like, oh, I see what my dad saw. He was a CPI research accounting, so I was recession proof. I was good with numbers. And so I was like, all right, I'll do that. So in case the NBA didn't work out, I did make it to the pros, but not the NBA. I did make the right choice ultimately.
You're smiling. That's a good sign.
Yeah. I mean, I had a classmate, Adam Hall, who was my height. He had a 50-inch vertical. He was basically rated as high as Vince Carter, but unfortunately he broke his foot his junior year of Virginia when he was about to be a lottery pick. So my dad made the right call because Adam was in town, and I was as tall as Adam, but I was not as good as him.
Eric, I love to talk to authors because so many people say they want to write a book and they never do it. So tell me about your journey of the Great Tax Escape.
I appreciate that. It started a year ago. I had left a business partnership and run its course for me, and I didn't know what I wanted to do next. I had spent some time out in San Diego. I lived there for half a year. One day I went to a seminar and heard Tony Marie Torrey and her partner Paul speak about writing books for accountants and financial professionals. I started figuring out that I wanted to shift towards focusing on high net worth clientele more often. I already worked with some, And so I was like, all right, well, I have time this summer to work on a book. And so I met with them and we had a plan. I had some ghostwriters, but I had to review every chapter once a week. Tony and I got together. Tony also interviewed me to capture my voice, my personality, so that the book would read as if I'm talking to you in person. And since I have a unique personality and perspective, they wanted to make sure that was captured. I wanted to use the book as a marketing piece for high net worth clientele and not to make money. And that's how it got to be. I had time to do that last summer. In fact, this summer, I'm going to go ahead and announce it. I'm about to work with 21 Media, and we are going to finally do the audiobook. I'm going to do that with Drew Lasker, who's a client of mine, and my podcast co-host with the Sports Gumbo. He's a commentator for Sky Sports for the Super Basketball League, which used to be the British Basketball League. He has his jersey retired at Point Loma University. He'll be back in the States this summer. We will be working on that, and we will finish it before September. That it's been a great project, and it was eye-opening, and it wasn't as hard because I happen to know about the subject, and they made sure we kept the book short. If you can see the screen, it's a little small book. It's, fits in a bag. You could fit in a clutch or a purse. It's about 100 pages. You could read on a short flight. You could read in 45 minutes. And I'm proud of it.
So the book itself, what did you want people to take away from the book? If they go through those 100 pages, what are the key elements of that book for them to know?
That's a great question, Bernie. The thing that I want them to take away is that you start making a lot of money, you don't necessarily have to pay all the taxes out there because, a lot of people don't realize. So I'm going to talk about the U.S. tax code because I know that you have people in Canada, and I don't serve Canadian clients unless they have presence in the United States. The U.S. tax code is considered the longest singular volume book that we know of, right?
Oh, ow.
Right, because most books that are extremely long, they're multiple volumes, but I'm actually looking at...
I'm thinking there's a library somewhere there.
Well, I actually have a
one
library printed around this prop, but here you go, right? So I have a King James Bible right here. You see how thick it is?
Yeah.
And it's with small print. The U.S. tax code has 40% more words than this King James Bible that I'm holding right now. In there, there's information for you to not have to overpay on tax because for my people that are, believers in the Lord Jesus like me, they'll say, well, Jesus did say pay to Caesar belongs to Caesar, but I'm also remind you, Caesar gave you a guide on how to pay him as little as possible, legally, ethically, morally.
Makes sense. Has your book improved your relationships with your clients? Does it kind of like break the ice? Not only, come talk to you, but does it also help them kind of understand? Does your book also help people figure out all the moving parts and why they should be talking to you? Because obviously if it's thicker than the King James Bible, right?
My book, the tax code, right.
There's going to be some alleys they don't know about, and you do.
Right.
Does that help guide them that way?
Yes, it does. It's a great conversation starter, whether I'm in airports and I meet somebody, or 2 weeks ago, I was at the Masters. See, I got my Masters hat. I stood at a party at Top Golf, and I even got to meet people like Michael Strahan, gave him a book. So, Big Mike, you need to talk to me. It's great. It helps you stand out because, there are other CPAs that have written books, but most of them aren't, from the feedback I get, they're not as engaging. We have, analogies regarding LeBron James. We have Chris Rock jokes. So yes, we do.
You know what? In our other podcasts, people say, listen, whoever your audience is, you got to speak to them that way. I think that's fantastic. You've done that.
Yeah. One of my clients, after he hired me, researched me and found that I did an interview with CNBC. He called me and said, hey, I thought that was pretty cool that you quoted Charlie Murphy. Now, unfortunately, I didn't get to do that in the book, but I think for the audiobook, I'll find a way to do that Charlie Murphy quote on habitual line stepping.
So here's a question for you. When is tax planning important? We want to protect that $1 million, but when do you start tax planning and how?
You start from day one, right? A lot of people make the mistake of waiting till the fourth quarter, and it could be too late because some of the strategies that you can invest in that, and before I go on, the reason you want to start from day one, because basically there's two elements that have to happen for you to get significant tax breaks, particularly when you make $500,000 or more of taxable income in the United States. The first element is that whatever strategy that you use, there has to be an element of leverage. Okay. So the best leverage that you all will get. So let's say you're uber rich. You made $25 million this year. You come to me and say, Eric, I want to do something that get a big tax break. Says, okay, do you have a private jet? No. Do you want one? Yes. So we find you a Gulfstream jet for $20 million. So you're like, how does that work? So you're going to put 20% down. That's $4 million. That gets you a $20 million deduction on that asset if it's done correctly. That's a 5-to-1 leverage with that $4 million down payment. You get $8 million in cash savings at a 40% rate. That's 2-to-1. The other element is two mechanisms. One, transactional, such as the private jet example, or one that most people in the United States that invest in real estate, regardless of status, familiar with 1031. That's leverage through transactions. And then the other strategy is charitable, where you can get multiples through that. In fact, depending on the strategy, you can get up to 100% of ordinary income and or capital gains written off. The thing about charitable, though, the downside is once you donate that money, whether it's through a charitable trust or a fund, or a donor advisor fund, you don't have control over that. So that's the downside of charitable. So most people tend to like the transactional method of getting deductions, because then they're free to donate charitably on the side however they like at their own pace. So we have clients who do both, but I usually encourage, since most entrepreneurs like to be in control, that's how they make their money. We do transactional because you can control the asset as long as you use it within the parameters of the IRS on jets, cars, real estate. You still have control over it, and the savings you can donate for your own cause and not use red tape, and it works out beautifully.
I think podcasters need jets.
Yes, we all could use a jet. I mean, a Lear jet would be wonderful for me. I have a client that's looking to get a Falcon. I told him I'll help him as long as he gives me access to it. He said he will, so cool.
Tell me how an average business guy can use a wealthy mindset, not only for tax savings, but to change his mindset.
That's a great question. On the habits of the wealthy, my business coach at Rise of Kings, I'm wearing their shirt today, and I'm a platinum member. My coach is Mondo Davis. Shout out to Coach Mondo. He reminded me that wealthy and highly successful people do three things. One, they wake up early. Okay. Number two, they meditate. For me, my meditation is reading the Bible, praying, and also journal. And that's my form of meditation. And then the third thing is that they work out. This year, as of this morning, I've dropped 24 pounds since March 24th. I am now down 100 pounds from my heaviest when I saw my cardiologist in Austin, September 2023. Those habits will help translate in your business. And in tax-wise, for entrepreneurs that are not super wealthy, there's some basic things you can do. You can look at retirement planning, depending on your income, home office deductions. If you have a corporate entity, the rule called the Augusta rule, which came from the Masters, Augusta, Georgia, where you could have your business rent your home. You can rent your home to your business and get tax-free income that way, 14 days a year. I literally walk by properties at Augusta, Georgia, where people have these big houses or small homes, and those 2-week rentals at Augusta, Georgia are paying the mortgage for 6 to 9 months a year for those homeowners. You could do the same thing. You don't have to be a property owner near Augusta National to do that, but it needs to be documented correctly. You could also hire your kids and do some real estate investing. In fact, if we're talking about short-term rentals, if you can afford it, is a great way of lowering your tax, because you don't have to have there's no passive income rules involved on the loss side versus traditional commercial real estate. So those are things that you can do. There's several hundred things, but I don't want to put everybody to sleep either. But those are some of the big things that come to mind real quickly. Also, company vehicle. As long as you drive it for business, get a vehicle that has the gross vehicle weight rating of 6,000 pounds or more. It's not just TV, so you need to look up with the car manufacturer. You can get accelerated depreciation that way as well, especially for someone like me that travels a lot on business between Houston, Austin, Dallas. It's helped me a lot.
This whole process means that you have to be aware that finances matter. So if you're an entrepreneur just starting out, you have to have some literacy. Even if you don't know how to do the debit and credit columns in accounting or your bookkeeping, you have to know something's out there and the money's coming in. It's good to have a gobs of cash rolling in, good cash flow. But financial literacy. So how do you suggest people kind of tune in so they understand some of the parts? Reading your book is one of them.
Yes.
Most people, they start a business, the last thing they think of is the accountant, the insurance. They might think about their lawyer, but they're all going to be really important. And it doesn't matter where you are, right?
Correct.
So what do you suggest for people to get their literacy up so they have a sense of why it's important?
So financial literacy, if you're starting out and you can't afford a CPA, tax professional, or bookkeeper, at least start out by getting the free stuff. Find a tax professional, financial professional you like online that's reputable. And, there are a few out there. I would find books about that. There's a lot of free content and also low-cost options for business owners. Intuit provides low-cost bookkeeping through QuickBooks where professionals do it for you. But it's very important because I learned in college from Dr. Jack Etheridge that accounting is the language of business. When it comes to merger and acquisition, whether it's a buy, sell, or investing, the first thing that's looked at is those numbers. In fact, I'm working on a large deal. I'm under NDA. But the biggest thing I'm involved in is the budget. We have to put a 3-year budget. Bernie, it's important to do it when you get smaller because when you get bigger, it becomes that much more important. It's the same process whether your business is worth $100, $100,000, or $100 billion. It's the numbers. Are they organized and clean? I saw for myself when I lived in San Diego, there was a business owner who had a salon in Poway, California. The lady did not keep good books and records. I was called to meet her and gave her a quote. She said, no, thank you, and chose somebody in her culture that did it for a third of the price. This particular ethnic group does business or culture, which, okay, great. Well, guess what? The person, their culture cost them $500,000 on the sale. They saved $10,000 to lose $500,000.
Eric, you've been on 5 different continents. What's it like during accounting? Is it basically hold true wherever you go? Is it like physics? If I get trained here in Canada, I can work in Saudi because physics holds true wherever you go. Is it the same for accounting?
Yeah, I mean, there's going to be some different reporting, but it's basically the same, especially now you have the IFRS, so you're getting more to the globalization of accounting standards. So if you understand accounting, debits and credits are still the same no matter where you live. My professor, Dr. Samuel Smith, said that we got that from the Egyptians when they built the pyramids. He said it himself, other people said other places, but accounting started in Africa. So if it worked to build the pyramids, those things are still standing. Egypt wasn't built overnight because those pyramids are still standing in a lot better shape than the Colosseum. I've been to both of the Colosseum, and Rome is great, but the pyramids have stood the test of time.
Tell me about scaling your business.
Well, scaling is, you definitely want to aim higher than lower. One thing I've learned from people like Grant Cardone and other successful business owners, it's easier to, in fact, Skylar Lewis, who runs Rise of Kings, reminded us in our meeting in March, it's actually easier to aim for 10x than 2x. Because first of all, if you're going to scale for 10 and not 2. And the reason is that 10, you have to be really focused and you really have to put in effort. Because if you just want to double, it doesn't take a lot of effort. Even though even though people are like, well, Eric, I'm making $5 million a year. If I want to double, you're telling me that you would think it's a lot of effort, but you're more focused when you want to scale from, say, 5 to 50, your focus is narrow. So 10x narrows your focus on what you need to do, your clientele, your strategies, and you may not reach the 10x, but you'll definitely do more than 2.
So in most professions, like using the medical profession, for example, you'll have the general practitioner. And then all of a sudden, if you're having a kid, then it's an obs and gyn. If you're ear, nose, and throat, neural. Is that the same thing for accounting? If you're a business, life's super simple. You have your accountant, this is how you do your stuff. And if you evolve into other areas, are there specialties in accounting, or is there a team that you build up around you that
Yes.
are different points of time that you tap into that person because it's tax specific as opposed to just general accounting?
Yes, absolutely. So for a lot of the wealthier entrepreneurs, they have multiple layers. For the extremely wealthy, they have a family office. But even within the family office, you have people who do accounting, the financial advisor, the tax specialist, and the tax compliance guy. For people who are 7 figures, you can have a virtual family office model without that expense. In fact, a client of mine here in Houston who has an oil field service business, they have their CFO for their business, and then they have me to do the tax accounting. Think of it as, since right now the NBA, NHL, right? Both in playoffs. We'll go NHL because I don't want my Canadian friends left out. On a hockey team, you have your goalie, your center, you have your wingers, and you have the defenders, right? Am I correct? Okay. See, and by the way, I root for the Blackhawks, and they suck these days, but that's okay. For a big professional organization, you have a head coach, right? You have assistant coaches, you have a general manager, you have your front office. It's no different as you get bigger. You're going to need more specialties, and you're going to need more components to keep a larger operation going. When you're first starting out, you don't need all that. But once you start making 6 figures in your business, you will need specialties, right? Lawyers. Those of you wondering, Eric, I'm in the United States. I can't afford to keep a lawyer retainer, but you can start out using Legal Shield and get similar services at a subscription price. That's what I did for the first 4 or 5 years of my business. So there are ways to get that, but as you get bigger, you will need a specialist. And guys are getting role players to bolster their perimeter shooting or perimeter defense for their stretch run. It's the same thing in business. Sports and business are very similar. As you grow and get more complex and aim higher, you need more specialists as you narrow your focus to win your championship. And in entrepreneurial, the championship is to not pay half of your money to taxes.
Yep.
Speaking of financial planning, does that play a role in mergers and acquisitions?
Yes, absolutely. And if you're going to buy a business or sell, you should have conversations before you sign your letter of intent, because depending on the size of the transaction, there are ways for you to structure your business to where you can pay 0 tax legally. And so you should have those conversations beforehand. And you should make sure when you're in business, you have your 1-year plan, you should have a 3, 5, and 10. A lot of clients that are in the tech space doing startups have 1, 3, 5-year plans. Most of them are to take them public or to sell them. And when those are executed right, they make a ton of money. And they don't pay a lot to their respective governments.
You find that for the startups that are building up their business, is it a goal from the accounting perspective? You get to a certain size and going, listen, I need to wrap this up. I want to sell it versus I want to grow it, become a legacy. Because there are some companies, they've been around for a long time in most countries and never sold off. What do you recommend for somebody? If you're an athlete, you are the business. I get that piece, right? And then the naming rights. If I'm doing tech startup, do I build it to sell it? Do I build it to grow it? Do I build it to scale it and become the monolith? Do I become the next Microsoft?
Yeah, I think it depends. You have to decide what you want your life to look like, right? In the Old Testament, Habakkuk 2:2 says, have a vision, make it plain, and put it on a tablet. So I recommend that you get a vision board and you figure out what you want your life. Well, did you know that in the movies, when movies are written, the first thing they work on is the end. And from the end, they work backwards. So figure out what you want your end to be. For some people, they just want to build something, make a bunch of money, and then do nothing the rest of their life. Or they want to getting other businesses. And then once you figure that out, get with your financial and legal team and work backwards. Some people like to build businesses for 5, 7 years and then they leave. They're wanderers or gypsies like Jimmy Johnson or Bill Parcells. Some people want to have a family business. Since we're talking about sports, like the Bus family, right? With the Lakers or the Chicago Bears, the McCaskey, how, that family's owned that franchise since the day one, or the Pittsburgh Steelers. So it just depends on what your objective is. But once you decide that, then you'll know how to build it. But I can't tell you you should sell your business in 10 years because you may enjoy running it. If you have a great business and it's added value to your life and it's support your community and you don't want to sell it, then why should you sell it? Just because someone makes you a big offer doesn't necessarily mean that you should sell it either.
So I got a quick question on that. With that frame of mind, going, hey, someone says, here's some money for your business. Does that tell you then as a business owner that it has more value than maybe what you had in mind? It's more valuable than you may have thought it was. And does that then spur you on to, hang on, buddy wants to buy this? That tells me there's more potential here. And is that where they come back to you and say, how can I leverage this? How can I make this business that much more robust? Assuming I want to grow it, right? And have a family legacy.
I'm actually working with somebody on that right now. I know somebody that has a technology business. I think the valuation of it's 120 million right now. But I advise them, if you're looking to sell, if you're not hard up for money, I'd wait, because if you can make that in revenue, then you have a 12 to 15 multiplier. Now you're talking about 1.5 bill waiting 18 months.
Patience of virtue.
Patience. And it's not even just patience, but if you can wait a year and you're not hard up for money, $120 million is a great amount of money. And, Bernie, if you don't think it is, you can wire it to me today and I'll go buy a jet. And I'll have my jet pick you up. But if you can wait, why not wait 18, 24 months? And then now you have a few billion, and then you can invest in multiple businesses. And you can, and I know what he wants to do with charity, and the difference between 2 bill and 120 mil would allow him to do all that for the same business. So you just have to decide what's important to you. I was offered someone wanted to buy my firm a few years ago. And I thought about, so I've never made this public. Very few people know. I almost sold out of the California market. The guy reneged on what I asked for. It turned out it was good I didn't, because had I sold it, I would have missed out on the money I made with the ERC business after the pandemic. Because I moved to Texas right before pandemic. The transaction fell through because I wanted to focus just on Texas and rebuild my life there and maybe angle towards Florida. But it would have restricted me. I would have been under non-compete, and I'm glad. I would have traded dollars for pennies. So I'm glad I didn't do that deal.
Where do you see business and accounting going in the next? They said that spreadsheets were going to ruin the accounting business because there wouldn't be any work for accountants. Where do you see the accounting in your business going in the next 3 to 5 years?
Oh, man, I know, right? And work was only supposed to be, 2 days a week with computers? Yeah. 3 to 5 years, you're going to have, as accountants, we have to be more specialized because AI is starting to replace like the simple functions, right? So for instance, I was on the phone with my dad and I'm looking at a business loan, and my dad's like, well, why don't you go to Excel? It's like, why go to Excel when ChatGPT can calculate much faster? Now, I know the inputs. So I figured out if I had a $500,000 loan, what the monthly payment is. AI is basically going to get rid of the basic accountant. So you need to be specialized. Even though AI could tell you, I have a wealthy client and I need to be careful. I'm not going to say his name. He feels like I'm going to call him out, but I'm going to encourage him to waste time. AI still can't do the tax plan for you. It can tell you about strategies, but it can't really analyze your situation. So you have to be more of a specialist. That's where I see accounting being headed, because the next 3 to 5 years, there's a massive swell of overseas labor. Our business, for some transactions for certain M&A deals, we're looking at overseas labor to keep our costs low so that the investors can get a high rate of return. So you better specialize because AI and overseas labor are getting bigger and bigger. People like me have to start taking a look at it so that we can provide a high return for our clients and also be more efficient in consulting. AI makes tax research faster and more efficient, but then the thing is the general public still doesn't know what to tell AI and what to look for on tax matters.
This is a sidebar question. Running shoes seem to be a prominent figure. Now, if someone's watching this on YouTube, they'll understand what I'm talking about. Or in the audiogram, tell us about the wall of running shoes you got on the go there.
It's basketball shoes, not running shoes.
You said baseball?
I did used to run half marathons, so I used to have a collection of running shoes for different surfaces. And the fastest mile I ever ran on a business trip in Australia was 5:30 a long time ago. I couldn't do that right now. I might do a quarter mile 5:30.
Mile easy in a car.
Yeah. When I lived in California, I got to be around sneakerheads and caught the bug. And so out in California, people are dressed more casual in business in San Diego and Austin. So I have these, but I recently purged about 40, 50 pairs of Kobe Bryant shoes. And so sometime next couple months, I'm probably going to purge another 100 pairs of Jordans because in business, I have to start dressing up more often. In another room, I have a nice collection of dress shoes of an Italian designer. If you ever heard him, Salvatore Ferragamo. And so I have a great relationship with the store in Rodeo Drive. If you ever go to Rodeo Drive, please see my friend Lynn. She takes good care of me. I have to speak at function stuff. I can't speak on stage in a pair of Jordan 1s anymore. So
Unless that's your signature, people could get away with it.
yeah, but I'm on prover right now. So once I hit certain figure, you will see me bust those out, but I need to prove myself. So I'm traditional. So that way someone objects, then I can show my bank account balance and says, I can't hear you. That money's clogged my ears.
You're at new heights.
Right.
So,
Yeah, how if somebody does have some money to manage a tax program and it's a little harder, I'll talk to our American listeners, how do they get a hold of you?
Like Deion Sanders says, I'm not hard to find. If you type Eric Pierre CPA in Google, you can find me that way. You can also find us on Instagram at Pierre Accounting, on Facebook, Pierre Accounting. Our website is www.pierreaccounting.com. Also now have a personal website, which is ericpierremoney.com. So I'm pretty easy to find.
I want to say thank you to Eric Pierre, my co-host Wayne Pratt, and you, the Knack for Business listeners. We really appreciate our time with Eric. And Eric's here to help you stop overpaying your taxes in the U.S. and start building your real wealth. So that's the key in advanced strategies. After years of working globally for Fortune 500 companies, Eric realized the smaller businesses weren't getting enough of the financial tools and guidance. So if you are a business, reach out to Eric. If you're in the U.S., if you're in Texas, apparently, or California, he can help service your space. And he's just as a quick reminder, he's a second-generation CPA, former pro athlete. He knows what it takes to rise up to the top and move your money around in a smarter way. And let Eric take you to the next part of your journey.
To reach the podcast hosts, email them at info@creativeinsight.com or by the website creativeinsight.com, spelled kreativvisig.com. To reach Wayne at his email, wayne@motivateyou.ca, that is MOTIVE, the numeral 8 and the letter U.ca, or his website, motivateyou.ca. If you would like to be a guest on this podcast and share your knowledge, let us know. We would also appreciate your feedback on the content or format. Check the show notes for more details. For these podcasts, we like to acknowledge the support and thanks to the following people. Carl Richards from Podcast Solutions Made Simple, a renowned podcast expert. Fred Crouch, who is the Property Wizard podcaster, where Bernie is a co-host. Jovan Streaker from At Hive, a co-working space that is more than just a space. Then Melanie Weber, Bernie's invaluable business partner. And Wayne Pratt from Motivate You Inc., who serves as both a coach and co-host of these podcasts. Disclaimer: Please note that the NAC 4 Business podcast episodes are meant solely for educational and general informational purposes. The information and opinions contained within are not intended to be professional advice on any subject matter. The thoughts, views, and opinions expressed by the participants are their own personal beliefs and do not represent the views of the podcast hosts or any affiliated organizations. It is important to note that this podcast is not a replacement for consulting with certified experts in your area who possess knowledge of your unique situation. The hosts of the podcast, along with any participants or affiliated groups, do not take responsibility for any actions taken or not taken based on the information presented in this episode. It is highly recommended that individuals seek guidance from their own personal advisors in fields such as accounting, law, or other pertinent areas prior to undertaking any actions or making decisions that may impact their financial, legal, or other aspects of life.